Good morning all, and thank you for joining Techstep's Q3 presentation. My name is Børge Astrup, and together with our CFO, Anita Huun, we will take you through the operational highlights of the quarter and the financial results. Techstep is a purpose-led organization designed to help customers with smarter mobile technology. By making the world of work smarter and more sustainable through mobile technologies, we're making positive changes to the world of work, freeing people to work more effectively, securely, and sustainably. To have a clear vision and mission is critical, and it's our guiding star in everything that we do in Techstep. From developing software solutions, attracting talents, developing our organization, winning new customers, and delivering high value to our existing customers and stakeholders. Techstep is a mobile technology company that helps customers to utilize software and hardware. We are the only mobile technology player in the Nordics that can deliver managed mobility, including software, advisory, and hardware. We have solutions for those that work in an office and those that are working out in the field, also known as frontline workers. We have some of the leading consultants within mobile technology in the Nordics and perhaps in Europe. We have 1.3 billion in turnover, where the focus has been to build a recurring base, which now has grown to 295 million, of which 104 million is from our own software. We have a very strong position in the Nordics with large private and public customers. The commercial momentum continues in Q3, and with the launch of the product solution Techstep Lifecycle and Techstep Manage, increased traction is expected and can be already seen with positive movement in the sales pipeline. The growth in software ARR and total recurring revenue analyzed continues with 104 million in software ARR and 295 million in recurring revenue analyzed, while the net gross profit effect is lagging. Building recurring revenue takes time, and we expect to see positive net gross profit development in 2023. A cost optimization program has been initiated, and the execution has started to materialize, with 14% reduction in personnel cost. Profitability is improving with EBITDA adjusted improvements of 10 million compared to Q3 2021. We set the goal of doubling our software ARR by 2025 when we launched our new financial targets in Q3. With the software ARR growth, a good growth in both net gross profit and EBITDA is expected. We are proud to have raised 103 million in a private placement in a tough financial market in Q3. The capital strengthens our balance sheet and will fund the final phase of the transformation. We are now at the crossroad and perhaps the most exciting time in Techstep history. We have gone from being a hardware company to a software and service company. The challenges are no longer of selling hardware. It's to help customers to be able to utilize the mobile ecosystem. We now have a product portfolio that solves specific challenges for our customers. We have a new management team with a sharp focus. Throughout my whole career, I have worked with selling software. When I look at the products that Techstep can offer, the setup of how we can deliver great customer value, it all comes down to our execution moving forward. The journey has taken time and has cost a lot of money. Our focus is to turn Techstep into a profitable company and to build shareholder value through delivering our software and services to our customers, while at the same time we optimize our cost base. Our goal for 2023 is to have a net gross profit of 420 million, a software ARR of 140 million, and an EBITDA of 50 million. While in 2025, the goal is to deliver more than 540 million in net gross profit, more than 225 million in software ARR, and more than 150 million in EBITDA. Mobile technology is one of the fastest growing technologies that have hit the market. The areas that you see on this slide is the core of the development, and what's important for organizations both now and going forward. It is difficult for organizations to be experts in all these areas, and this is where Techstep comes in. Mobile devices have become one of the biggest IT investments in most organizations. The price of mobile phones are increasing, and organizations lack both the competence and the solution to handle and utilize the potential. They have a need to control the cost, and our software helps them to gain control and optimize their cost. Briefly summarized, organizations are not concerned about the hardware going forward, but how they can utilize the technology for their organizations. When we talk to organizations, there are three main challenges they have. 1. Lifecycle management of mobiles. 2. Managing the mobile ecosystem and security. And 3. Increasing the efficiency, quality, and safety for the frontline workers. What we now have done is to rig Techstep to deliver on these challenges in a market with a strong growth. When I joined Techstep, there was a clear need to have a new commercial product packaging. We now have a new product portfolio that solves the challenges our customers and most organizations have. Smart Devices solves the lifecycle challenges for organizations from purchase to service and reuse of mobiles. The solution gives employees the freedom to choose the mobile phone they want, and while the organization have control over the cost. Smart Control helps organizations to have control over the security, the apps, handling of data, and the interactions between other IT systems and the mobile ecosystem. SmartWorks is a solution for the employees that do not sit behind the desk, where they can increase the quality of their work significantly, be more effective, which results in happier employees and better results. For many years, Techstep has acquired and developed mobile technology solutions, where the focus has been on acquiring products and investing. Techstep comes from a focus on hardware and transactional business, with a silo-based structure with many products and limited focus on integration and synergies. We are now a software and services company with our own software. We have a scalable business model with a focus on recurring revenue, where the hardware and advisory are additional services. With this, we now have a unique position in the market. We had to make it easier for customers to understand which challenges we can solve for them, and make it easier for our salespeople to sell our solution. The journey has not been easy, and there has been challenges where we had many organizations internally and far too many products to be sold out in the market. This had to be simplified in order to increase the momentum and value. We now have one organization with 3 different product portfolios and 7 solutions that solve the customer's challenges and provide great customer value. Recurring value for our customers and recurring revenue for Techstep. The transformation shows that we previously had approximately 40 Norwegian kroner per user per month in net gross profit, while now we have a product portfolio that is designed to drive upsell and to give customer increased value. Through Smart Device and Smart Control, we can now triple the gross profit by upselling the customers with the value potential of 150 Norwegian kroner per user per month in net gross profit. Customers often start with simpler challenges and our smallest lifecycle product, and upgrade to a more functionality, while they at the same time can help them to gain control and save cost. Many organizations also have employees that do not sit behind the desk, where the employees need to increase their efficiency and quality as the organization can optimize their cost through our SmartWorks offering. The average net gross profit for the smart work users are approximately 380 Norwegian kroner per user per month, which gives us 10 times higher net gross profit than before the transformation. The standard agreement with customers is 2 to 3 years with an automatic annual renewal. The transformation from a transactional model to a recurring model is not easy, but we have gone from approximately 22% of our net gross profit from recurring and recurring-like revenue, while now in 2022 it has increased to approximately 60%. The company has gone from being dependent on third-party suppliers of hardware, kickbacks, and commissions to getting a large share of the net gross profit from own software and services. We now have a significantly better product mix with a completely different stickiness due to both software and hardware as a service. Techstep has a unique growth opportunity with our software solutions and has built up a solid IP portfolio over time, both organically and through acquisitions. This is also where much of our future growth ambition lie. We will lead with software because there are 3 important advantages. 1, it drives revenue in the rest of our business, like hardware and advisory and services. 2, it drives higher net gross profit growth as we have approximately 90% gross margin on these products. And 3, software is sticky and contributes to a completely different long-term perspective and visibility of our revenue going forward. We see a strong shift in the momentum on the software side, and our redefined product portfolio will be a game changer for us. We are already seeing signs of the new product portfolio is bearing fruit. And already out of this year, we expect to see a solid software ARR growth. We experience and see demand from our customers for our solutions. And in today's market, it means that we can contribute to cut costs for organizations, which will generate increased leads and sales. The plan is built on a balanced growth going forward, with a target of minimum 225 million in software ARR by the end of 2025. I will now hand over to our CFO, Anita Huun, who will take you through more details of our financial results for the quarter.
Thank you, Børge. So, in the third quarter of 2022, revenue was 289 million compared to 290 million in the same quarter previous year. A stable revenue development this quarter on reported figures, but organic revenue growth was actually 3% due to the sale of the voice and contact center business, which was part of revenue in Q3 last year. The voice and contact center business was sold in Q1 this year and contributed with almost 40 million in annual revenue and 22 million in gross profit last year. Q4 2022 will be the last quarter where we'll have negative comps due to this divestment. ARR from our own software passed the 100 million mark last quarter and continues to increase nicely. ARR is up 8% organically versus last year, and we see momentum building with the launch of our new product portfolio with a clearer value proposition and commercial packaging. Unfortunately, we have seen some extended lead times on our software backlog, which has given a slower ramp on ARR than anticipated, as we do not book ARR before we have started to invoice the customer. Net gross profit in Q3 was on a pro forma basis the same as last year, as the voice and contact center business contributed with 5 million in gross profits last year. Overall, the net gross margin is still slightly down, driven by product mix, where we have seen a strong growth in our hardware revenue. Our gross margin fluctuates quite a bit, both with product mix and customer mix, but will over time increase as our software portfolio and revenue from software increases in the total, as the gross margin in this area is north of 90%. In Q3, we saw a nice improvement in profitability. Despite overall flat net gross profit this quarter, and this is due to the cost optimization efforts that we have been doing, and with a 14% decline in salaries and personnel cost, EBITDA adjusted increased 10 million year-over-year. Our cash flow improved this quarter and decreased net interest-bearing debt from 237 to 224 million. Techstep successfully raised 103 million in a private placement, which will have further positive impact on our net interest-bearing debt in the next quarter. Techstep continues to ramp and grow the recurring commitment between the company and our customers, which leads to more predictable revenues and cash flow generation longer term. We are therefore very happy to see the record high recurring revenue base this quarter, with revenues of 295 million. We are growing the base 5% sequentially and 14% year-over-year. And of the 295 million, 104 million of this is ARR from our own software portfolio, yielding margins north of 90%. However, the transition towards a stickier and higher quality recurring revenue model does impact revenue and profits short term, as our software revenue is billed on a monthly basis, and we are moving customers more from upfront payment towards spreading more of the earnings out in time. We are seeing very strong momentum in our managed services business, and since Q3 last year, recurring revenue from our advisory and services business is actually up 33% organically. Our customers increasingly see the value and need for Techstep's expertise and managed services on the mobile ecosystem, as complexity and cost is increasing in this area. In Q3, we have defined new operating metrics for Techstep, which are better aligned with our business model and underlying profitability. One of these metrics is net gross profit. Net gross profit is gross profit adjusted for depreciations related to our hardware as a service portfolio, as leasing falls under IFRS 16 rules, and as such, these costs are booked as depreciations instead of COGS. That is why we have adjusted for these, and at the same time move from EBITDA to EBITDA as our preferred operating KPI on profitability. The net gross profit for the last 12 months was 362 million, corresponding to a slight decline from Q2. The decreasing trend in reported net gross profit has been driven to a large extent by the divestment of the voice and contact center business, which was divested from Q1 2022. Q4 will be the last quarter we see this negative impact. Software has to an extent compensated for some of the negative divestment effect, but softer hardware margins and continued drop in operator commission has also had a negative impact. Operator commission is now at a very low level compared to historical levels and is expected to flatten out. The key focus for Techstep is growing our overall gross profits, and particularly our recent wins on the software side is important to be able to do this. Every new contract we win on software side drives revenue on hardware and advisory side as well. Techstep divested the voice and contact center business at the beginning of the fiscal year, while Famak was acquired in Q2 2021. As such, we provide visibility on our pro forma figures as well. The voice and contact center business was seen as a non-core asset, but it did include 22 million in gross profits in 2021. On a pro forma basis, Techstep's Q3 net gross profit was flat at 82 million in Q3, but the conversion from net gross profit to EBITDA increased quite significantly from -16% to -1%. This is driven by the cost optimization and 14% lower salary cost and personnel cost this quarter. On a pro forma basis, our OpEx and payroll is actually down 7 million year-over-year. If we look at this over a 12-month period, we saw a declining trend throughout 2021 in our profit conversion, as our gross profit in H2 last year was impacted both by hardware delivery issues and lower hardware margins, while we at the same time continued to invest in our transformation toward a recurring model and into our technology platform. The trend line has improved recent quarters and with growing software sales and cost optimization effects, this positive trend will continue, both short-term, as stated in our 2023 goals, and longer-term. Our 2025 goals is a net gross profit conversion north of 25%, making sure we return shareholder values after a long period of investments. Our equity ratio after Q3 stands at 41%, down from 42% in Q2. Intangible assets are mainly goodwill of 604 million and customer relations and technology of 188 million. We continue to invest in our hardware as a service portfolio. These devices are owned by external funders, not Techstep, but they are capitalized on our balance sheet. The value of these stood at 161 million after Q3. Long-term interest-bearing debt includes acquisition loans of 67 million and seller's credit of 30 million. Short-term interest-bearing debt includes 6 million in acquisition loans and 26 million in seller's credit. On top of this, we have utilized 126 million of our credit facility after Q3. At the end of September, Techstep raised 103 million NOK in a private placement, which will strengthen the balance sheet from Q4. Of the 103 million, 25 million of these were a conversion of seller's credit, meaning that going forward, our seller's credit short-term has been repaid, and we have remaining the long-term seller's credit of around 27 million going into 2023. We have also refinanced our loans with our main bank and moved 50 million of our credit facility to long-term interest-bearing debt. This gives us a much improved flexibility going into 2023. H1 was very capital intensive, as the transformation was in high investment phase and our working capital was building. In Q3, we saw a much better development and cash flow from operations was 56 million. This was driven by improved profitability, but also a 30 million improvement from lower working capital. CapEx related to software development and IT investments was significantly down from Q2, but we still need to finalize the remaining part of the transformation and platform, but CapEx going forward is expected to come down further. Proceeds were used to repay debt during the quarter, and our net interest-bearing debt decreased from 237 million to 224 million during the quarter. This will go further down in Q4 when proceeds from the capital raise are included in the financial statements. As we communicated in September, we are reaching a point where it is possible to reduce our cost base significantly and at the same time continue the commercial momentum. This is possible as we are approaching the end of a longer investment phase, and it's time to unlock synergies from acquisition and all the investments that have been made in the organization and the new product portfolio. We therefore announced that we would reduce the cost base by 90 to 100 million through a mix of OpEx, personnel cost, and CapEx. And as we saw this quarter, we already see some of these effects on our profitability due to the declining personnel cost in particular. In Q4, Techstep expects to book a one-off restructuring cost related to the ongoing cost optimization and right-sizing of the organization. As we have communicated, we are coming from a longer investment period, both into new products, organization, and standardization of processes and technology, and our total cost base in 2021 was north of 450 million. This cost base will be reduced by 90 to 100 million by the end of 2023, and we have already executed many of the key initiatives and are well on our way to execute on the remaining part. Closer to half of the cost cuts will be driven by lower personnel cost, and the remaining cost reductions will come from better utilization of general OpEx and a lower need for IT investments and external CapEx. Over the last 2 years, many initiatives and investments have been run with external resources, making them easier to cut short term. As also communicated during September, we are targeting to increase our net gross profit going forward and have a realistic and achievable plan to do this. We already have a large untapped customer base in Techstep, and the upside potential would be to get existing customers over on our software ARR, which again drives revenue in the two other business segments, hardware and other, and advisory and services. Historically, Techstep has had a large part of its gross profits from operator commissions. And going back a few years, these comprised more than 100 million of the company's total gross profit. In 2022, these are expected to be less than 15 million NOK, meaning that going forward, this negative headwind on net gross profit is gone and underlying growth will be more visible. Our target is to lift net gross profit by at least 50 million in 2023 to 420 million. And by 2025, the net gross profit is expected to exceed 540 million. The combination of the 100 million in cost optimization and the net gross profit growth from successfully converting our customer base to increased software ARR is what will turn Techstep into both a cash generative and profitable company, securing value for both customers, employees, and shareholders. Børge will summarize and give some closing remarks.
Thank you, Anita. To summarize the Techstep journey, Techstep has gone from pushing hardware every second year with low margins, while we now lead with software that has significantly greater value to customers, increased stickiness, better margins, and a solid upsell potential. We have set new targets going forward, both short-term for 2023 and more long-term for 2025. With the investments in recent years and the new product portfolio and the optimized cost base, we are comfortable that we will already see the result materialize in 2023. We have a target of 420 million in net gross profit in 2023, with a correlating positive EBITDA of 50 million. Our software ARR is expected to reach 140 million exiting 2023. The long-term ambitions are, of course, a good development on the net gross profit growth, and almost a tripling of EBITDA from 2023. This is possible due to that the software provides a completely different operational leverage. So to summarize our targets, in 2023, we will have a net gross profit of 420 million, a software ARR of 140 million, and an EBITDA of 50 million. While in 2025, we will deliver more than 540 million in net gross profit, more than 225 million in software ARR, and more than 150 million in EBITDA. So let me summarize Q3. We are in an intensive product launch period, as we are now in the final phase of the transformation of Techstep. With a commercialized product offering, we now have a new product portfolio that solves the challenges our customers and most organizations have. We have a large customer base with a solid upsell potential, with approximately 1,800 customers without a recurring agreement. We already see the first effect of extracting the synergies from the acquired companies and the cost optimization program with improved profitability. We have raised capital to complete the final part of the transformation and restructuring. So we now have a strengthened balance sheet and additional capital in the company. We have set new targets going forward, where we turn Techstep profitable to create value for our shareholders. We have set new targets, both short-term for 2023 and more long-term for 2025, which aligns with the Techstep transition into a software-driven mobile technology enabler. And that concludes today's presentation. Thank you for attending. Please join Anita and myself in the Q&A session today at 8 o'clock. You can always submit your questions to us by using the investor relation email address or during the session using the chat functions. Hope to see you soon.